Hey, welcome everyone. Today's session, um, what a day it was today. The start, we had fantastic run at the beginning. Now it's cooling off, and that's a little bit expected. People, after so many long trading sessions of going lower and lower, they had such a big jump, and obviously they like to take some profit off the table. So that completely makes sense. But anyway, let's have a look at the market. Let's see what we have and what we don't have here. Hey Jared. Right. So, right, this is basically today's setup. So you have KraneShare 3%, ARK on average 2.5% here, Amazon 1%, Tencent 7% already from the morning session. Square, I mean these guys were much higher, I guess, but right now they cooled off a bit. Palantir went into negative today. Same for Canadian Solar, and Pins had a fantastic run today, and it still is having one. What else? What else? Yeah, then on the other hand, we have some recovery stocks that are not doing great. Sunwork is at 18%. This thing is in fire. The last 2 days, Sunworks just went crazy. Let's have a look at it. Yeah. So the last 2 days here, and almost 32% Sunworks in the past 2 days alone. I mean, yeah, I was so red on this one, so I'm happy that I'm getting some money back. Not very good day for, not a bad day though, for cannabis stocks. NNDM went minus. Let me see my orders. I'm happy with my orders now. DraftKings. How is DraftKings? So DraftKings is now 62. Let's check DraftKings here. So these are the two levels that I want to add to my play. 1 hour. Somehow I feel that this thing will go up, then will get bounced. I'm willing to wait on this. Yeah. Long term still it will go up. So the momentum, you can see it's starting to come here. It's not confirmed yet that the momentum is completely going up yet in 4 hour, but probably I think it will come here and then it will come back a bit and then go up. So I'm feeling it goes here and then comes back. But I will wait. I will wait. I don't have much money to spend on this right now, but yeah. So what happened is that 2 days ago we gapped up in many of the stocks. So you can see it in in many stocks actually, and probably I'm willing to wait for those gaps to be filled. I expect it to be like that, but let's wait and see. Let's have a, so this is the 10-year bond. Just look at it. A day. Well, you can see it's still going up really, and I actually think it should go up, and just that I don't believe that thing necessarily just destroys the market, but I'm not the one that who should decide on that. Let's see about some earning calendars. What do we have? We have CarMax today actually. The morning. Yeah, Macron is actually up already. That's a huge miss by Walgreens. What else? This thing was just being hammered in the past week. So actually the earnings are relatively good, as you can see, but there is no earning tomorrow, I guess, or it's not the market tomorrow anyway. But no, I did not add to DraftKings yet. I want to add to two positions. Let's check IDEX. IDEX went crazy today. Actually, this was one of the plays that I actually was too late to get, and it's coming down, but yeah. Yeah, I don't know. IDEX is a $5 to $6 play, $5 easily. So it's still cheap compared to where I expect it to be, but just such a big jump actually scares me to buy it now. Nano mention, yeah. Let's check in NDM. For draw some lines here. So this is low as it went. The next was around this place, 780, and maybe yeah. Yeah, maybe I keep it as it is. I'm not sure if I have to add to an NDM. I already have enough. How about Blink? Yeah, coming down. New coming down. Nasdaq. Oh, so it went above this. 4,000. Actually, I expect this to have some sort of a correction, but let's see. Let's see, how are we doing today? 2% today, not bad. CGN. Yeah, I see this going up. Just I'm not really aware of the details of that, so I'm a bit afraid to get into something that I don't know.
When we shut down the economy for the pandemic, we broke a lot of supply chains. And we drew down a lot of inventories. We're still trying to catch up and rebuild inventories across the economy. We're all acutely aware of the shortages in the semiconductor space, but it spreads out through almost every supply chain you can think of. And we're in an accelerating growth, accelerating inflation environment. That's good for all sectors of the stock market and the economy. We're going to remain in this mode at least through the second quarter and probably into the third quarter. And so I'm not worried about an overheating. If anything, everything still points to the fact that the inflationary pressures we're seeing are real. They're more than base effects, but they're still transitory. They're reflective of the stimulus we've seen. They're reflective of the breakdown in global trade, where you've had high cost producers to be able to compete with the low cost producers. And let's keep in mind the investments we made during the pandemic are high productivity investments. So we still have all that productivity to come through over the next 12 to 18 months. So I'm not at all concerned about overheating. We're already getting leading indicators that show we'll have a global growth slowdown on the industrial side later this year. So everything points to this is just a normal cyclical recovery with the nuances of the pandemic.
Chris, let's talk about some of the sectors that are likely to be big beneficiaries if, in fact, this infrastructure package passes in its current form. Electric vehicles, one Jared and I were talking about before we came to you, so many EV companies that have come to market, either the direct route or through SPACs. What are some of the names you like in that space, especially given the amount of money the president has said he wants to set aside to really supercharge this transition into EVs?
Sure. I won't get into specific names only because compliance will come after me. But let me break it down beyond just your typical EV companies that everybody's familiar with. Those are the early winners from a stock performance standpoint. You know, they demonstrated the attractiveness of the market. It's time for investors to start branching out beyond the names we all know and look at the subcomponent suppliers, look at the material companies beyond even the rare earth, copper, and cobalt. When you think about the transition that's underway, it's going to completely change the content in your average vehicle. And there's going to be a much higher IT component of that. And that's true all the way down the value chain. So it's beyond just semiconductors and software. It's higher end materials that are going to be needed even for painting applications. So as we develop more self-driving technologies, you need different reflective characteristics on the paints themselves. So this is really going to proliferate throughout multiple supply chains, not just in tech. We're going to see beneficiaries also develop in traditional auto space. I mean, one name I'm not afraid to mention because we don't own it, which is Volkswagen, right? We're going to watch this company completely transform and likely be one of the largest producers of electric vehicles by the end of this year. And we're just early in the S curve. So I think it's an exciting time. I think it's going to create a lot of excess capacity. I think Jared, you mentioned earlier in your commentary, we're just in the infancy. We do not know who the winners and losers are going to be. So as an investor, what I'd prefer to focus on are the choke points. Focus on the suppliers, the picks and shovels that are selling into these OEMs.
Yeah, I'm glad you brought up Volkswagen because they've really stolen some market share from Tesla in Europe. And I do remember the time they briefly became the most valuable public company in the world in a short squeeze. But I wanted to I want to shift over to the electrical grid. We've seen a number of cracks in service. California comes to mind, Texas more recently with the polar vortex. What can we do to get this up to snuff? Because decades of neglect leave us with some real problems here.
Yeah, it's a really critical issue. I mean, we can't think we're going to compete in the world stage as an economic superpower if we don't have stable energy. And like every other element in our economy, we've underinvested in it. Not only do we need to harden the grid, we need to boost generation capabilities. There's a lot we can do. I know when people start thinking about clean tech, that you automatically go to non-renewable sources for energy production, but there's a lot of investment that can be made so that we can take traditional sources of energy generation and use carbon capture and dramatically reduce the carbon footprint. And that's going to be necessary for the transition anyway. So we're going to see big investments in generation. We're going to see big investments in hardening the grid. And a lot of these get to, strategic issues. I mean, we like to think of this as things that are nice to have, but the reality is these are going to become national security assets, similar to the White House's push to bring semiconductor manufacturing back to the US, because those are strategic assets. These are going to be like defense assets. So we're going to see big investment in the investment grid across all areas, not just renewables, but in traditional generation, hardening, a lot more transmission and distribution, and we're going to have to. I mean, it's silly to think we're just going to start filling up our cars off the electric grid and not have to make some major investments along the way.
Chris, the flip side to that is what happens to the fossil fuels industry. And we've had so many guests on who are really bullish on oil right now, energy stocks in general, stemming directly really on the reopening trade. Both WTI and Brent crude today up more than 1%. Of course, we're looking at the OPEC meeting on the back of that as well. But how are you positioned in that space, especially if we're talking about this grand plan and this ultimate transition that's going to happen that will reduce the amount of fossil fuels in the market?
Yeah, I think it's important to realize, I think we would be lucky. We'd need breakthrough technology to really reduce the amount of fossil fuels that we're going to consume on a go-forward basis. I think a better way to think about it is we're going to see traditional fossil fuels have a lower and lower percentage of overall energy that is consumed, whether that's for transportation or other sources. I think it's going to be very dangerous to not continue to invest in our fossil fuel production. I think it's unfortunately the U.S. was a one-time beneficiary of our shale investment. That was a bubble. It's unsustainable. Without it, we would have already been in an energy crisis. Unfortunately, we have not, as a globe, we have not been investing in fossil fuel production since 2014. A lot of the projects that were started then have already been brought online. So as we reopen, as we continue to consume fossil fuels and grow, it's going to put a strain. So I'm relatively constructive on oil prices and even natural gas prices. I would caution people, we're not going back to 100 unless we have a geopolitical event, but $60, $65 oil is a high enough price for investment to occur. I think, unfortunately, some of the policy stance we're taking is going to deter investment, and that's going to lead to price spikes in fossil fuels. This transition is a multi-decade transition. And I think a broader point for investors to think about, over the last 2 or 3 years, we've been focused on one sector winning versus another sector, value versus growth, financials versus tech. We need to clear those misconceptions. We're in a position now, everybody's going to do better. The investment that's being pushed forth is good for everyone. We've kind of repositioned the market in the first quarter. So just because it's good for clean tech doesn't mean it's going to be good for traditional, not going to be good for traditional energy players as well. We're going to be in a pretty broad-based positive environment for a while.
Jared, it looks like you're muted there.
Rookie mistake, first day of the quarter. I do get one of these. I just wanted to note that we do have some OPEC Plus headers crossing the wires as you were talking about the price of oil. They are going to agree to resume gradual monthly output hikes. That's according to a delegate, and the talks are going to continue on details of that output agreement. So Chris Wallace, Vaughn Nelson Investment and Management, CEO and CIO, thank you for joining us. All right, if you're sitting at home scratching your head wondering if you've got COVID, congrats, you've now got some options. The FDA is authorizing an over-the-counter rapid antigen test by Abbott Laboratories, as well as an at-home test by the diagnostics company called Quiddle. Abbott stock is up about 10% on the year. And sticking with pharmaceuticals, coming up, we're going to discuss a number of developments in the vaccine space, which we'll chat about with Dr. Amesh Adalja from Johns Hopkins. Stay tuned.
This was incredibly important. Exactly what he mentioned, the Volkswagen and also other EVs, really bullish. And I mean, you wouldn't expect anything else considering the situation. But also, again, one of the important points was that many people, like including myself, when we talk about EV, we just remember Tesla and like NIO and other, famous basically EV names. But honestly, Volkswagen gonna be a big thing. My problem right now investing is that I'm actually invested already in it. But this is a very good investment. Like, it has the future, it has good PE ratio, it is strong already in Europe. They have very good result compared to Tesla. I mean, they took some market share from Tesla there, so I meant that. And also the fact that they're also giving you some dividend. I'm not really a big, I'm not crazy about getting dividend. But anyway, I think this is a very, very good play. I don't know. I would really wait for some dip for this one before to go in. This is a bit high, but let's have a tree. Let's check it. This one. 240. Yeah, it's this one. Okay, this one is delayed. But let's have a look at like day result. It will continue for some time, I guess, but eventually there will be a comeback. No, not month, week. Yeah, this is really now going crazy there. I would wait for this to dip if you want to buy. I'm not sure if I do buy it in the end. Not have enough money, and also I have my eyes a little bit on different EV plays. But okay, so one of the things that we are noticing now is that we are actually giving back many of the gains that we had today. Yeah, Palantir, so cheap, really cheap. One of the, I mean, still it's cheap, and I'm down on this like a lot because I had already some investment in it, and I averaged down still minus 15% on this, but I have no worries on this one. This will give me way more than it has right now. It will double. I actually think it will double, and that's why I'm on it. But it really depends. Like the important question is that how long it will take to get there, but we'll get there. Now dimension, interesting that this one is going down. If it goes again to 7, I might add a bit to this one. But let's check. So BNGO, yeah, I'm gonna be happy to add a bit more into BNGO. Yeah, this is a little bit too much to get an NDM, but we'll see. Let's pack some. Okay, let's have a look. Let's have a short time. Yeah, I still expect this to go down further. How about S&P? Let me check. Okay, it was SPCE. Yeah, I expect this to come down a bit here. The momentum is up right now. It's not very strong actually up, but yeah. We actually gave back a lot of the gains that we had today. What else should we check? Let's check Fever or Fiverr. How about Upwork? Upwork is also a very good company. I really like it. Upwork or Fiverr? I honestly think Upwork is better, but the idea is that Fiverr might have better growth. I think so. I think the revenue, I mean, don't take my word for it, but I think the revenue and the earning per share for Upwork is higher than Fiverr, and it's way cheaper. So, but of course, I think the growth thing was in the other direction. All right, is it the time that we are actually having this back? Let's check. I want to really get into IDEX. I mean, let me see if there was any news on IDEX. NIO was 7% today. Just gave back a lot. I think it will basically, I think that it might come back, fill the gap, and then go up again. So if this one is 295, so 3 basically. 297, 298. Let's get this at 298. Let me remove. I had something else here. 298. Sure of this one now. Yeah, what else? What else should we check? This. Check the news here. Yeah, IBB. That's a good one. What do you mean by that? Yeah, apparently that's the case. I think Fauci just suggested something again, or basically warned people that this is not over, basically. So yeah, I'm also tired with the restrictions, but I mean, that's a sensitive topic. I don't want to get into that one. Everyone has his own opinion. I try to listen to the experts. Look, if I'm good at something, I expect people that don't know much about it just listen and not just comment because they feel they need to. But obviously, I understand the other side. People are really tired, and some people really have to make a living, so they can't just like me sit at home and work remotely. What are these guys
Tech
saying?
has really taken a backseat to some of the other sectors. And also, here's Micron. That's up 132% over the last year. A very similar chart after consolidating most of last year during the COVID mess, really came alive in the latter part of the year and the beginning of this year. there's a lot going on in the market today, though. In the NASDAQ 100, the mega caps really leading the way. We got Alphabet up over 2%, so is Microsoft, Apple under 1%, Amazon and Facebook a little bit more, and then Tesla up 1.5%. Worth checking in on the EV space, especially after that big infrastructure bill speech that President Biden gave last night. XPeng Motors up 3%, still up 77% from the year, although they've given back a lot from the run up they had in November. Also got to check in on European stocks. We just closed. Settlement is underway, and we can see in London the FTSE is up about 0.4%. In Frankfurt, the DAX up 62 basis points, and in Paris, the CAC 40 up about a little bit less, 0.6% as well. Well, let's go back to the heat map space, because I do want to check in on the sector action. And we've seen the tech and communication sectors. Those are both in the lead, the only ones that are outperforming. So the mega caps really driving the moves higher. By the way, S&P 500, 4,000. Can't wait till it's S&P 500, 5,000. I'm going to break out a hat for that. But taking up really the defensive sectors. We got staples, utilities. Those are not the least bad, the most down, the biggest laggards here, Akiko.
I was going to say, I think you have hats for a number of levels, right, in the market. Do you have a 4,000 hat?
Not yet. I think I'm going to hold out for 5,000. Maybe get a Bitcoin one. Wait for Dow 50,000. Who knows?
Yeah, I mean, given that a lot of our guests have said Bitcoin's going to exceed 100,000, might as well get that hat ready. We'll see. All right, coming up, pro-democracy activists in Hong Kong face jail time for their involvement in.
Okay, that's it. That was enough. Yeah. So that's the story of today. I'm not really in the mood of selling things. Really. I have some good moves today, but I think Sun W went to negative again, or no? But yeah. It was higher than this. Let me check Sun W. Yeah, this was 17%, so gave back a lot. But honestly speaking, I'm not in the mood of selling this thing now. I'm actually in the mood of buying this DraftKings. Just cannot convince myself. Yeah. Short term, I guess it comes back, but I'm not sure. It's just not decided. So when my momentum is at the other direction of the stochastic RSI, I try not to predict. I try to wait for them to happen, and then I know what to do. Predicting is not good, but acting on the price action and basically those results, that is good. Crowd is, yeah, I really want crowd here, but I don't know. I don't have lots of money now to spend, honestly. So if I want to say what I want, I would say I want it to go up. But of course, if it want to just go up crazy, you know that it will come back hard again. So shift. Let's check shift here. Let's go to long on stay. Do we have week? This is not looking good. But So this one went to 660. I actually think, that's my opinion, obviously, no financial advice, but I think Shift will triple from the current prices. It's just so many good things about this company. And when you compare the result with something like Carvana, I think the other successful second hand car dealership. So I actually think Shift has a lot of room to grow, and I don't have a big investment in it, and because there is a lot of room to go up, I thought that maybe it's better to just wait a bit, just a bit, for it to start moving upward. Even if it goes like 10% something or 20% from its current points. So from these points, let's say that it goes even 20 points, around 10. I still feel like this is a really good investment then. But for now, I don't know how long it takes before it goes up. And but I'm sure it will go up sooner rather than later. So how is Mr. Ideonomics working? It's late one. 298. I'm looking at the wrong time frame. Yeah. So it bounced from 20 EMA on 15, but we wait. The momentum is down, and I will wait for it. Clover. See Clover. Just this Clover cannot just get a break really. Seven. Now it's 740. This has a lot of room to the upside, but I think if you are really, if you bought this high, let's have a look. Let's give you some proper thing. Going up, but I mean, there is still a couple of days, or at least you need a week before Clover actually takes off, if it takes off. So, and in week definitely it's a very so not much there. Okay, so in 4 hour we are actually in relatively good placement. So we have been outside the Bollinger Band, and then first our stochastic RSI went up, then immediately we have also our momentum. But the problem is that one of the crucial thing in this one is that this one should have a rather strong move up. This is a bit too narrow, not that narrow still, but you know, this is better. But yeah, how about 1 hour? Look, this is what I usually say. There are a couple of ways to go with an investment if you have had already paid a lot of money or if you bought really at high prices. So the first way is that you are certain that this thing will go up again. And that means that, and that is an important part, because if you're just thinking based on speculation and this kind of thing, and if you haven't really done your research about the company, then what happens is that it can easily just turn around. The Clover in this case is actually hit very hard because of a short seller report and things like that. But in my opinion, if you, let's say Palantir, in my case Palantir, I bought it high, I have no worries about it. What I do instead, I start to nibble down as it comes down. I add nibbles, so really small amounts as it comes down. Now, this can be a bit, they say catching a falling knife, but I don't think if you wait enough, that's a problem. Right now, I mean, Sunwork went up 30% in 2 days. I'm sure it will go down again, but eventually I want to wait it out because I know that that is a play that is very cheap right now, and I expect it to double my investment basically on it. Now, when you are talking about, and this is again, let's just be on the track. If you have money, nibble down as it is coming down. You reduce your basically you reduce your average cost, and that's a good thing. Now, another way of dealing with this kind of situation is that just wait a bit. And despite the fact that I actually do that myself, the first model, but the second way is that you just wait to get some sort of confirmation that you are on a moving uptrend. So, for example, let's talk on for example TR. Like when you look at like 4 hour, I don't remember where I bought this one. I think I bought it like somewhere around above 30. Then it went down crazy, and I started putting money in, and that was a mistake basically. I didn't wait, and it went up, and I said that oh it's going back, let me buy. But what happened is that it just went down, tried down, and I was already so low on this. Usually I would say you wait for a confirmation that this is going up, but although this means that you cannot catch the whole movement, it gives you better opportunity to not really put your money in the oven and just waiting for it. But this is actually a very good example. So I did that for Palantir, and I also, when there was this jump, I said that oh it's gonna go up because it will come down, and then I expected this to go up, but then again it didn't, and so it went down again. It's basically depends on what you're comfortable with. I think the first method that you all the time nibble down, it costs a lot of money, and sometimes you're very happy that you nibbled down. This downtrend was relatively a long one, and again, if you are happy with the company, if you know that you can hold long time, then I think it doesn't really matter which way you choose. But don't have fear of missing out. That's a thing that usually causes you lose money. and or you usually can, I mean, no one with a panic, no one gets a good decision if it's in a panic mode. I mean, nothing good comes to it. It's only survival mode, and believe me, survival mode, some of those decisions are awful, especially in stock market. And I think if you know a company, if you can wait it out, so that's a very important thing. That's why I always stay basically out of leverage, and that has been my way of working. It's very easy to get over leveraged, and just, you know, it can get tricky. But for me, honestly, this is already good here, and I try to nibble down sometimes. If I see that there is suddenly a bad news or something, I just wait for things to come back a bit normal. So if you have a catalyst that is pushing your price down, that is a little bit more clear that you should wait it out. But not all the time you get something clear in your way. So it was a long rant about things, but I hope you got the answer. So you can either nibble down immediately, which is okay if you have money, and you basically reduce your average cost. But sometimes it's better to just wait out a bit and then get some confirmation that this is going up, and then start adding more money. Like, for example, if you were adding like $100 each time, the next time, like for the second method, you can start adding like, I don't know, 300, 400. So instead of just going all small. But nibbling down is not a bad way either. So it really depends on the amount of money you have. What do we have here?
And LGBTQI organizations to think about ways that we can strategically work together, to not just think about how we
not really the discussion that I'm interested in. Okay, GIVO is coming down. How is our orders? I really want to get my positions ready for the next round, but yeah. Actually, today I was planning to get IDEX. Today I actually had planned to start adding to IDEX, but it just went up like crazy. But it came down a bit still. Let's check. 30 min. Okay. $15. Okay, so it bounced. Yeah. Not sure yet. It will go up again, but it could be that it goes down. Let me check something. So if it is here, then I have here. Is it getting is it being rejected by this first retracement line? We'll wait and see. Let's keep it there. Tilray. Let's have a look at the market, what things are actually. Okay, Palantir down again. Still, this is now below 23. Easy $30 play. Easy. that's really the thing. When people are all expecting PLTR to go up, it just doesn't go up that much. And then one day you come and it's like crazy high. It just needs one push for it. So we are going nowhere. This is another one, like Mara. This is like Riot. And I actually got into this one very cheap. I got into this one like something around, I guess, 17 or this range. And I actually more than doubled my money on this. Slightly more than doubled. But then it just was going crazy. I mean, it went down here. I mean, I had it like there, and then it went back, and I guess I sold it somewhere around here, so around 36, 37. Then it went down, and then it went down, and this was the moment that I had to buy. But I was all the time thinking that it should come back to these 18 or 17, and that was a very clear mistake by me. This was a clear buying opportunity, really, at this line. And every time I see this, I'm just crazy about myself because such an easy play. I sold at an excellent time. Then the next day it just went down here, and then this is actually the day that everything was just getting crazy. So basically I was overwhelmed. Suddenly I was so negative that I couldn't think straight. And I didn't sell anything, but I wasn't smart enough or quick enough to buy things properly. And then we were all the time in this mode that, hey, who knows, maybe it breaks some support, goes lower or things like that. And it just went up, a little bit retracement, then up. So I had a price target of 60 on this one, but basically around 55 I was setting to have a little bit of room. I just didn't get there. So I'm waiting for the next big dip, which probably, I guess it was this one. I would probably do not get to this 24, but this 30, 28, this is basically the line that I have to get ready with. I mean, just get used to it. So this is basically it. Same thing for Riot. Sorry. Why not? Right, blockchain. Yeah. I had only a small position in this one. But then again, for me, this one has a higher target price. I think this is 80 or even 90, but I think you can actually just set it at 70 and then earn a good money from it. If you are in it, then good, but in long term, I guess crypto is gonna win. And I'm not myself that much into crypto because I just don't know what happens with it. You know, I feel like it is a winner, but there is this big basically fear factor in it that, okay, what if it goes down again like before? And I understand many good things that Bitcoin can stay here, but the only thing that is really annoying me right now is the fact that if there is this central bank's currency like crypto that basically comes up and replaces Bitcoin. I don't think it can anything replace Bitcoin, but even if they take some market share of Bitcoin, that's enough to really tank Bitcoin, at least for some time. I'm not in it, so I don't have any ball in the game. So wish you guys the best. ADA is the way for future, probably. I don't know. There are other things that I know, but talking about Bitcoin.
Currencies out there now, and not all of them have the same value. If your cryptocurrency asset merely becomes worthless, that is potentially a taxable event, and taxpayers can deduct in the year that it becomes worthless. But if it's just lost, that could be problematic as of 2018.
Michael, to what extent has the IRS kept up with the wider adoption of cryptocurrencies? And do you get the sense that there could be more guidance coming?
I hope there's more guidance coming, and I believe that there will be. As I was preparing for, to talk with you today, as recently as this morning, there's an article about a new John Doe summons where the IRS has asked an exchange to provide information about its investors. There's no current obligation for information reporting by the exchanges out there, but that doesn't mean that taxpayers don't have to report their gains and losses. And the IRS has a couple of initiatives already in place where they are clearly looking for taxpayers that are trying to avoid their responsibilities. The IRS announced something they're calling Operation Hidden Treasure a couple of weeks ago, where they are working with their criminal division and their fraud division to find taxpayers that are not meeting their obligations. Because the blockchain that these cryptocurrencies trade on, it may not show the name of the individuals trading, but it shows wallets and addresses, and the IRS can find the people behind them if they work hard enough at it. There's also a recent announcement of a bounty on a number of blockchains that are intended to provide anonymity to the folks that are conducting business on those blockchains. And finally, taxpayers should really be paying attention right now as they're getting ready to file their 1040s. The IRS has put right on the face of the 1040 a question asking whether taxpayers have engaged in any sales, exchanges, other transactions involving cryptocurrency. It's right there under the address block on the return. You can't miss it. So they are looking for that information.
Yeah, I definitely didn't miss it myself. Well, we got you, and we got time for one more question here. I got to ask about NFTs, non-fungible tokens. Is that simply a property, like a piece of art that's taxed? Any ins and outs that make this digital, different from the more analog offerings that we're used to?
So NFTs are the latest in a long range of topics that have come up in this space that we don't have clear guidance for at this point. As I look at it today, as we've looked at it, based on the activity we've seen, there's the potential for NFTs to fall into this category, the special category of assets the IRS considers collectibles. And if so, collectibles held for more than a year, when and if they're sold or exchanged, come with a higher tax rate potentially of up to 28%, rather than the normal long-term capital gain rate of 20%. So if you're engaging in activities with NFT, it's another area where you really want to talk with an advisor, think about the facts behind that, and think about what rate you should be paying tax on that asset.
Michael Meisler, EY America's Cryptocurrency Tax Center of Excellence leader. A lot of questions there. Certainly, we hope to have you back on the show again soon. Thanks so much for that. We've got much more coming up ahead in our next hour of Yahoo Finance Live. We're going to be digging into some of those climate initiatives in President Biden's $2 trillion stimulus or infrastructure package. Much more coming up ahead. We'll be right back.
Yeah, US dollar index went down. And that's why we are up in the stock market. Having a green day? Yes, I am. Oh, do I? I was. Yeah, 2%. Just casual 2%. Okay, people are actually talking about OCG, and I was in this one. I took some profits. I traded it, so it's like that. Let me check this CGN. So not still a strong momentum. It can actually come down here, and like this can be actually a good buy position or buy point. What I think is that this is going up, so if it comes down, probably there will be a hiccup here. It will come down and then probably go up. That. So it'll expect this to move like this, but it can come down here and then goes up. Yeah, I'm not I'm not in OCGN now. I was just saying that I had some money in it. I took it out, took some profit out of that. It was a small position, really nothing big. Virgin SPCE. How's this one doing? So this is supposed to come down a bit. If it comes down around here, I will add to my position. This is not very decisive now, this level, so we wait. Let's check our DraftKings. Yeah. So momentum up, and this is not. Talking about Biden's infrastructure.
The initiatives here that's included in the American Jobs Act. The president said he was going to go bold on the climate initiatives, and certainly this marks a huge transformation if the bill goes through as in its current form.
Yes, great to be here. It's an ambitious plan, but it's everything we've been hearing from the president throughout the campaign and in his early months about really jobs and climate going hand in hand. So this is a deployment-focused plan for clean energy and a variety of related sectors to power, transportation, and heating with electricity and increasingly clean electricity.
Rob, let's talk specifically about this national standard that the president is calling for in terms of utilities to have their energy mix. Certainly, those who have been in favor of this shift have said that renewable energies are so much cheaper than they used to be. But the concern has been about the storage elements of all of that. So we're talking about an ambitious plan. To what extent is the technology there to be able to scale out in the way the president is calling for?
The good news now is renewable energy is very cheap, and we know how to integrate it into power grids to get an overall reliable supply of power. It does require storage, as you mentioned. It also requires transmission, and those are both parts of the plan. We can get to 70, 80, 90% of our electricity from renewable sources, as long as we have those complementary technologies. We know how to get that far. There'll be some R&D probably necessary to develop other sources by 2035, which is the end target for the president's plan to fully reduce carbon out of the power sector.
Yeah, I want to focus on cybersecurity right now and how the nation's grid is vulnerable. We know that. We've seen some attacks around the world at various locations.
Cybersecurity CrowdStrike, baby.
A priority is cybersecurity when it comes to the nation's grid and electric supply.
Cybersecurity is a huge issue for all utilities around the country. They, of course, control their power systems. They have all sorts of sophisticated cybersecurity protections. They're not using the software that was used in other countries that were hacked. And we have good government oversight at the federal level. So there are a lot of protections in place, but at the end of the day, as everybody knows, with many systems and many attackers, we're always at risk. And I think it is something that everybody needs to be prepared for. Local authorities always need to be prepared for the unexpected. And things can happen to the power system, as we saw in Texas, that nobody expected, and we need to be ready for things like that.
Rob, where does this renewed focus on renewable energies leave natural gas? For so many years, we have talked about natural gas as sort of this bridge fuel, although the industry would argue now that they think there is a future there alongside renewables. How do you look at that as part of the mix?
Yeah, I think right now the natural gas system is the battery. It is the real battery that is there when the wind and sun are not available, at nighttime and when there's slow wind speeds. And that's how most systems are operating right now. So gas is that firm, flexible source that's there and available. And I think it will be for quite some time. Now, if we obviously in 15 years want to be fully carbon free, then some other source will be needed to provide that produces no emissions. And that could be gas plants where they capture the carbon, or it could be a variety of other sources. And that's where R&D come in, and they're also part of the jobs plan that the president just released yesterday.
Yeah, and we're seeing the government kind of step in and provide a lot of subsidies for the industry. Historically, this is something they've done. At what point in the future can the government just kind of step back and say, all right, the market's mature enough, we can let it take care of itself? Or do you not see that happening at all?
There's two ways to look at that question. One is, will clean energy grow without any form of policy support? The answer is yes. The economics are so strong. Wind and solar are so cheap. But the other way to look at it is, do we want to meet carbon and greenhouse gas emission targets and lead the world and get all the other countries who are often bigger emitters to do the same? And if it's the latter, then we do need some policies to accelerate the pace. And that's what this Biden plan does.
Rob Gremlich, Grid Strategies LLC founder and president. It's good to talk to you today. Appreciate your time. Let's turn our attention to the market implications of this $2 trillion ambitious infrastructure bill. We've got Simeon Hyman, ProShare's global investment strategist. Simeon, this announcement was anticipated for a long time here, but certainly it comes at a time when there are concerns about the inflationary pressures that are building. How do you look at this in that context?
The guy is really paying attention.
We've had rising rates since last summer, since they really bottomed out right in the midst of the worst part of the pandemic. What's notable, I think, is we had those little hiccups back in February, but
yeah. So many of the plays actually lost most of the gains that they had today. But there's nothing really that I want to add. Maybe if I want to add something, it's gonna be let's see, plug. Okay, IDEX is going up again. Let's then remind me to talk about Sumo. It's a company that I have really high hopes for it. Okay, Plug. This guy was trading at 70. Very high price for Plug. Right now it's half of that price. And it's not actually bad. Like, let me see. Let me check here. 31. Yeah. So 17%. I didn't buy it here because I didn't have enough money. I had to then sell some points, like I sold Chewy after the 15% increase in price. I should have actually brought the money here, but I think it was here already, so, or here. It was high for my taste, but this is good one. IDEX, let's check IDEX. I don't want to miss an IDEX. I will just nibble a bit on this. It went up. It's up right now. Actually, these tree lines are the ones I made a mistake. This is actually 38%, 50%, 61%. This was not the first point. I was wrong previously. Yeah, that's true. That's true. That's true. These are still not a done deal, basically. But I think IDEX has really interesting spectra of involvement in EV. But again, I do not have big position in this one. Like, it's really small. Still, I feel that this can double. I was hoping that this one goes back again. It just didn't go below this 270. And I was somehow convinced that it goes there. I don't know why. It just once, twice tested and then it never came back. But when I'm buying here, this is basically the FOMO that everyone talks about. It's really important to buy this at a good price. I'm all the time changing between BNGO, IDEX, GVO, because I really want to buy these guys. And DraftKings. Oh, where's DraftKings? Yeah, not really moving here. $15. Let's check SolarEdge. Let me check Blink. Ah, yeah, you're right. I wanted to check Sumo. Thanks for reminding me. This is actually here. I'm not gonna buy into this one. It can run up really. It can run up to 60. Hold Blink for a year. You get the result really. Hold it for a year. Yeah.
$4 billion market will also provide some much coveted tax revenue for the states. We got Cresco Labs up over 3%, Grow Generation up over 2%, and guess what? Green Thumb, that's up about 1.36%. After the break, unemployment remains.
No, I have not. I've not invested in a SpaceX. Not a SpaceX. The Cathy's space ETF. I mean, it's called a space ETF, but yeah. It's only a name. No, I think it's not a bad idea, I think, to have a bit there. I think you can find some good companies there, but it's it's very not how should I say? I think it's not really a business that I'm confident that it will work out as everyone expected it to work. I have a bit in Virgin Galactic, a bit. I sold the positions before when it was high. Then I bought a bit when it was on the downturn. Now I'm already on negative on it, but I keep that one. It's a very small position, so it's really nothing. But two positions that I have to make bigger is CrowdStrike and DraftKings. These two guys should be doubled. I mean, Crowd, especially DraftKings, like really seriously, this is a really good. Let's put it next to Crowd. If it comes all the way down till 184, probably I have to buy a bit. Like here I will nibble, and I will nibble or pounce here. So it's gonna be like this. Let's check. Sorry, DraftKings. And these two guys are really quality stocks. I should have them really here. Let's check DraftKings again. Man, let me buy this. Let's add the 61. Let me see. Let me see. Go today. So you have 59 to 957. So let's say 10. 59.70. IDEX is up again.
We place them on a range of modules that can really go from the digital literacy building blocks up to very advanced boot camp, training in terms of development web or other professions that lead to, cloud or cybersecurity experts. So we really run the full gamut of the digital skills spectrum. And our goal is also to work really in tandem with employers and companies.
Yeah. This is actually one of the other of this cloud plays that I think is just crazy good price right now. Just look at it. Sorry, let's see day. Let's see. It's here now. This is the first level, 20%. I mean, very short term, you can look at like 90, which is 4.5%, 5%. Then it goes to 20%. Then you can really think of it as 40%. All-time highs, 100%. Crazy. But yeah, not a lot of money in it. Probably if it goes to this line, I will buy a bit more. I don't want to hold a lot of it. It just has a lot of room to grow, and I like to keep it there. Close this. Plug.
digital basic learning track, and then really get them access to the freelance, the gig economy, where they're able to tap into the global markets, really compete and bid globally, and able to earn work that way. So I think what is really important about this is we're looking at more than 80 million displaced persons globally. With climate change, with a lot of the big trends that are going to be coming in the future, this is not a problem that's going to go away. It's going to be here to stay, and it's only going to amplify. And so I think the big problem that we see, that a lot of these big humanitarian agencies see, is how do we work on livelihood? How do we work on sustainability? These big questions of how do we, think about not just giving aid and shelter, but how do we also help people help themselves on their own terms? And so I think that's what really we come in, is really to bring in the skills learning part, but also to really connect them with learning opportunities.
Yeah, certainly very important work you're doing there, Jean. We look forward to tracking the progress for Connexio. Connexio founder Jean Guo joining us there. We're off for another break, but coming up, a conversation with legendary filmmaker Ken Burns. Our very own editor-in-chief sits down with Ken Burns to discuss his latest documentary on Ernest Hemingway. That's coming up after this break.
Yeah, so couldn't really get the things at the prices that I wanted. I think I'm gonna leave it as it is with some orders in play. We will come back at the close and see if we can actually add anything to it, but for now I think that's it. There is nothing that I can really add with these prices. Oh, Sumo, thanks again for reminding me. This guy, maybe look at it here. Sumo. So this is a company that does things very similar to like Palantir, but the most direct competitor of them is Splunk. They also like data analytic company. And what I think is that while they do not have as solid current result as a Splunk, I mean Splunk really is doing good in case of revenue and everything, but Sumo Logic is actually has a lot of potential in a sense that compared like Splunk, Datadog, and Sumo, these are the three basically very similar and competitors of each other. And between these three, I think the best one for growth is Datadog, and it is actually keeping its growth very well rate still during the pandemic, but it's very expensive with the current results and with the current numbers. Compared to them, while it has lower growth, Sumo, but still is in a very better price range compared to that. That was the reason that I got into Sumo. So Sumo, I guess, is like, if you want to be even a bit pessimistic, it's a $30 play. I think it can go easily around all-time highs that it has been, like around 40 and above. But honestly, like, this is now getting into the range that this is really at good prices. So this has a huge upside. So easily, like, it can get double this one. Or when you check Datadog, they are expensive at the current prices that they have. They're 80, just so high. And Splunk is also okay, but I prefer these two, Datadog and basically Sumo Logic. So excellent growth. I think they have really good customers. They're still gonna like get good deals and everything, and this is solid. But if this was selling off more, then definitely Datadog was a buy for me. With the current prices, I chose Sumo Logic. It comes with more risk compared to Datadog or of course Splunk, but I guess it's worth it because of the current prices. So that's my opinion. So again, do your own due diligence and do not trust what I say, but this is what I think. Is that once more before we leave, let's check Mr. IDEX. Okay, so it's going down. 15, yeah. $2.97. $2.98. And then I have at 270. Let's see, I have 290, 270, 240. This one's not gonna fill now, but who knows? Maybe. There's a webcast going on in Toro. They actually talk about different markets. I mean, today it's BNGO, IDEX, and DraftKings. So I have some prices on BNGO. Let's see if I can get it. And 21, 3, that's a good one. Also, I would keep nano dimension. I will buy if it's below 8. I think below 8 is definitely a good buy. It's a good price to buy at Gevo. Yeah, all right. I will leave now and we'll come back at close. Thanks again for joining in, guys, and talk to you soon. Cheers.